You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got a conversation with our friend Greg Palmer about the upcoming Finovate conference in New York City, September 8th through 10th, and some special credit union features that they've got baked into the agenda. So we'll be getting into that in just a second. First, let me remind you, you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com, where you'll find lots of information about their opportunities to help you with core conversions, generative AI, voice recognition, all that kind of good stuff. Just check it out. Lots of stuff for you to find out there. If you haven't marked your calendar already, I also want to remind you, and I think this is going to be a lot of fun, broadcasting live from the Strategic Growth Conference down in San Antonio, America's Credit Unions Conference, coming up just next week. On Monday, August 18th, a special time for our CU Town Hall, moving the schedule a bit to be able to leverage that opportunity to be there on site down in San Antonio. Monday, the 18th of August, 3:30 p.m. Eastern, 12:30 Pacific. It'll be 2:30 for what it's worth in the Central Time Zone where it's taking place in San Antonio. And we're going to be doing a special edition, live as always, but this time live with an actual audience in the room. And some special guests running through a series of topics, hopefully provocative ones like usual, and getting some hot takes on things. If you have, like I say, if you haven't marked your calendar already, and if you're already signed up to receive updates, you probably have gotten a calendar invitation from us to join us. But there is still time for you to join if you're not on our regular distribution list. Just go to cutownhall.com, and there's a place to request an invitation. Free to attend. You just need to register in advance. And we hope to see you there. Like I say, I think it's going to be a lot of fun. A little bit of a twist on our usual format, but pretty much the same excitement, and still looking for audience participation as well. Been following two news stories this week with kind of a blend of, I guess I'd say, amusement and amazement at the same time. So let's cover those real quickly before we jump into the interview. Buy now, pay later, and credit scoring. This is kind of an interesting twist. Whether or not the buy now, pay later activity of consumers should be included in their credit scores, and whether that's a good thing or a bad thing for all involved. And apparently we were very close to actually having that happen and have the data from the buy now, pay later activity reported to the credit agencies. Klarna and Afterpay, two of the bigger players, have now balked at the provision and providing that information to the agencies. They would like to get assurances that their customers, their BNPL consumer customers, won't be hurt by using their products and have their ratings actually go down, which is a really fascinating twist. It's like it's unclear to me and to everybody, I guess, as to whether the use of BNPL should, I guess, choose your verb, should affect people's scores in a positive or negative fashion. BNPL, the players want assurances that it's not going to unfairly hurt their people. The agencies are claiming that their adjustments to their models have already been made. For example, in the past, as I'm sure you know, if you open multiple credit card accounts in relatively short order, that will drop your rating. Because the assumption is you're actually looking for a lot of credit at once. So let's kind of wait to see how things kind of stabilize after time. They've made adjustments for that so that every opening of a new quote unquote account in buy now pay later doesn't have that kind of activity. But at the same time, they're clearly not going to open up their black box of their formulas to the BNPL players, but they want assurances that things aren't going to go down. This is just me talking off without any real specific information. It seems to me that BNPL, if used judiciously, should be a very logical way for people to pay. They're not paying interest fees. They're paying it off quickly. They're not carrying long-term balances. It should be at least as beneficial as putting up a bigger card balance. As we know, using something judiciously in concept versus how it's actually used in the marketplace can often be very, very different. So it can get out of control pretty quickly as well. How that gets reflected in the model, I don't know, and I guess nobody else knows. The representative from TransUnion in the article that I read in the Wall Street Journal actually made the reference to this as a chicken and the egg problem. And kind of paraphrasing, is that the only way they can make progress on these models is to actually use the data, even as they said, even if the models aren't perfect yet. That sounds to me a little bit like AI and the AI models, which of course we're also working with kind of in real time to improve them. So as a lot of these stories go, as I often say, there's more to come on this one, I'm sure, but BNPL ain't going away anytime soon, and it just seems that from if credit scores are going to be valuable, they have to reflect the entire life events of a consumer. So they ought to be in there somehow. So hopefully we'll find some kind of a resolution to this in the relative recent near future. The other one that I found very interesting is the executive order that was issued on debanking, which, to a little bit of my surprise, maybe not, both America's credit unions and the Defense Credit Union Council came out in support of the statement that was made around the Donald Trump's order on executive banking. I'm going to just scroll over here to be able to kind of specifically detail some of the things that I've saw. The crux of it, at the real core of the order, is kind of motherhood and apple pie. It says that no one should lose the ability to bank because of their religious or political beliefs. I think that one is in ensuring fair access to banking for all Americans. That seems pretty straightforward. I don't think a whole lot of people would disagree with that. The other kind of most kind of clear-cut thing, the order directs federal banking regulators to remove reputational risk and other equivalent concepts from their regulatory guidance. Again, pretty clear-cut. I think we'll see. The reputational risk gets very interesting, but at least we understand what that one's saying. Another one and there's also the Secretary of Treasury to actually develop a comprehensive strategy to combat. Here's where it gets kind of interesting, the phrase politicized or unlawful debanking activities. Okay, let's go ahead and figure out what the Treasury says about how they're going to address that. The Small Business Administration is required to force financial institutions to make reasonable efforts to reinstate clients that were denied services due to, again, unlawful debanking. So, the starting point of this, I think, makes a lot of sense. And I think that's why both the credit union trade associations I referred to have come out in support. Although Carrie Hunt of America's Credit Unions also makes the point, she is unaware of any single case where a credit union has been accused of debanking. So if it's not affecting the space, then I guess it's pretty easy to come out in support. Where I thought it gets interesting, and I don't often find myself quoting the Cato Institute in a sense where I'm saying, oh yeah, I definitely agree with this. They really picked holes into the lack of clarity of this and the open questions that it really leaves. So just a couple of things that they pointed out. Reputational risk is a very complex matter that's probably best left to the individual businesses to assess. It's kind of strange to say, okay, reputational risk cannot be in the regulatory guidance. Fair enough. A company can't assess its own reputational risk that might harm its business. I'm not sure how you actually, regulate against applying anything along those lines. So that one gets a little bit more interesting. They also point out that there's really no definition of politicized or unlawful debanking, a phrase which is used multiple times in the executive order. They claim to define it, but as the Cato Institute points out, their definition effectively boils down to saying that political and religious debanking is defined as debanking somebody for their political or religious reasons. That's not a very strong thing. They go on to say, it's likely that we can safely assume an internal policy explicitly stating that Christians or Muslims cannot have accounts would not be kosher. Again, I don't think anybody's going to disagree with that. But anything that's not that egregious becomes very mysterious about what qualifies. So I think we clearly need some more meat on the bones, for lack of a better way of putting it. The National Law Review also kind of weighed in, and they speculated that this would also potentially be an additional arrow in the quiver of fighting against ESG type banking in terms of environmental, social good, and governance, which I think is another interesting point that I hadn't really thought about. So again, the executive order's out there. Unlike a lot of these things, it's easy to make the statement. Then you actually push it out to the SBA, the regulatory authorities, the Treasury, to put it into practice. And that's what we'll be watching to see what happens next. On to our main event. We always enjoy catching up with our friend Greg Palmer out at Finovate, and they've got another great show lined up coming up just a couple of weeks from now. So I thought I'd catch up with Greg in advance and catch up and find out what they've got kind of cooking before we all get out to New York City for this one. And I'll be bringing back the news from there, but here's a preview. I'm here with Greg Palmer, the host of Finovate, coming up in New York City this cycle, September 8th through 10th in New York City. Greg, it's always great to catch up and kind of get a preview of what's coming for the crowd. I think you expect about 2,000, I understand.
Yeah. Well, thanks, Glenn. Appreciate it. Always good to get a chance to connect with you as well. Certainly looking like a big show this time around. Yeah, up over 2,000. We've been able to get up over 2,000 folks for the last couple iterations, and early attendance signs are strong. Obviously, a lot usually rolls in the last month before the event. So there's always kind of that outstanding, let's see who all signs up last minute. But yeah, looking really good. We should definitely get up over that 2,000 number and should have quite a few banks and financial institutions on hand.
Well, the one thing I noticed, I mean, like you say, you're still 5 weeks out and you've already on the website taken a bow for 20 out of 20 in terms of the top FIs in the country are already registered to be in attendance. But, that's only part of the story. It also mentions, I think, 475 financial institutions overall. That's more than I realized.
Yeah, no, it's a massive undertaking on the part of our team for sure. This is a huge priority for us, not only to get the right kind of banks in the room, and certainly we want those large multinationals and the big dogs, but we also like to see a lot of the smaller community banks, credit unions, and really everywhere in between. So it's been really fun for us as we get to know some of these large groups. A lot of the banks who, the top 20 are all banks who were there last year as well. So it's a little bit easier to kind of bring them back in. But it's been fun to watch the number of FIs grow. And this is one of the things that I think makes Finovate really exciting is when you can put all these different types of groups in the room together. Obviously, they all have very diverse needs, but there's a lot of common goals. And so where you see people kind of meeting each other and figuring out, hey, what do we do that we could learn from each other? Or how are you approaching this problem is one of the things that makes the event really fun from my standpoint.
And to some extent, it's one of those two-sided markets too. You got the people in the audience, but then you got the composition of the actual presenters. We didn't mention the model of Finovate, of course. They're live demos on stage, 7 minutes, and that's it. No questions, just see it. Draw your own conclusions, vote for best of show, and track the folks down in the room next door. The other thing I noticed, and I've noticed this over the course of the last couple, is that credit unions are making a bigger overall showing in your audience. And clearly that's by design. You've actually got a separate breakout for credit unions. I guess our friends at Circle are helping you put that together, right?
Yeah, absolutely. We're really thankful to Nick and the Circle team for helping to partner with us on this. And they're sending a lot of really cool companies our way. To help make that session a success. This is one of those things that kind of started organically. We noticed a little bit after the pandemic, we started getting a lot more credit unions reaching out, raising their hands and just buying tickets. And so we thought, let's do something for that group to give them a little bit of extra attention. So we started pulling out some companies that really were focusing specifically on credit unions and brought them into a different room, let them meet the credit union executives in sort of a smaller, more casual environment. And it's really grown. It's been really exciting. So this will be the third show that we've partnered with Circle on. They did New York last year. We had a very successful one in San Diego earlier this spring, and now we'll come back. And every time we do it, we learn a little bit. It goes a little bit smoother. We're able to really zero in on where the value comes from. But putting a bunch of credit unions in the room with people who are building products specifically for them has proven to be really valuable. So it's something that we're really excited about. And to your point, we've seen a dramatic uptick in the number of credit unions who come. And the really cool thing about this is these are groups of people who are raising their hand and saying, hey, let's build something. We're ready to move forward. We're ready to kind of tackle some of these big problems that we see coming down the pipeline. Let us help find them a partner that they can go out and conquer with. So it's been really good. The conversation's always buzzing. And it's good to just let credit union executives kind of talk amongst themselves as well. That's certainly a valuable part of it. I found that group tends to be pretty open with sharing success stories or lessons learned with their peers, maybe more so than some of the other types of FIs.
And I know that on the main stage, I guess 64 demos overall, some of the familiar names of a few QSOs up there, but I think what you're referring to, I think you said, is it 9 companies? Some of which will be kind of from the main stage as well, but some that will be exclusive to that credit union group, kind of a round table kind of speed dating, for lack of a better way of putting it, kind
Yeah.
of like pass around. It's not just one-on-ones, but it's like a small groups passing around the table asking questions. At least that's what I saw
Yeah.
last year. It's the same format.
Yeah, it is. It does look a lot like speed dating. We'll have a table full of credit union execs, and then the companies will rotate from table to table. So after about 6 or 7 minutes, they'll actually get up and move over to the next one. So over the course of about an hour and a half session, each of those 9 companies involved in the credit union spotlight will be able to connect with all of the different attendees who are there. And again, each interaction is sort of like a 2-on-8 kind of a thing, 2 company representatives, 8 attendees. And
That's very
so
popular.
it
Instead
makes
of
it
the
a little
one-on-one, we got the 2-on-8. Okay,
right.
yeah.
Yeah. Yeah. Well, 1-on-4, if that makes you feel better to factor it all the way down to its simplest form. But it has worked really well at kind of fostering conversation and encouraging people to ask questions. And that's, I think, been one of the most interesting parts of it. When we initially thought of this, we thought it was going to be much more the credit union folks hearing what the companies were working on and kind of learning what's out there. But the information has absolutely traveled the other way as well. It's a chance for these companies to get a sense of what the credit unions are thinking about, what their priorities are, how the innovation side of the ecosystem can help them too. And that's, I think, really valuable for those companies who are able to participate, to collect that kind of feedback and then turn around and say, okay, you're telling us you want this. Well, now we're able to give it to you. We didn't know that was a real challenge. So this two-way flow of information, I think, is really powerful as
I
well.
can I can definitely vouch for that with the QSOs that I work with. There's always that appetite of, okay, what exactly is it that they want? We hear this. What does it actually mean in the real world? How would that actually roll out? And you're right. I mean, based on what I saw last time, that conversation really gets, pretty, interactive very quickly. I
Yeah.
got to ask. I know that there's also, I mean, and I don't know if it's on day 3 or day 2. You've got a community bank panel. Obviously, like you say, you want to get a wide dispersion of both big and small institutions in the room. Community banks not doing the same type of breakout, but there is a panel there. Did you hire additional security? Keep the credit unions and the community banks at arm's distance?
I will say this is one of the things that I still talk about. When I first started running these conferences, I naively thought that you could run content that would be appropriate for both. And I learned very quickly that that was not the case. And so, yeah, the armed guards in between them for sure, all of these things to make sure nobody crosses the lines that they're not supposed to cross. No, the thing that always strikes me is that so many of the challenges that they face are so similar,
Yeah,
but I've given up on trying to bring the two
I'm
sides
in that
together.
all
So
more that unites than divides us camp, but it's like, yeah,
yeah.
it's a never
Um,
ending battle.
but I will say that we've seen, from the credit union side, those guys are more willing to open up when they know they're only surrounded by credit unions. The same thing is true for the community bankers. When you put them in a room and say, we're going to have some discussion topics now, that when you kind of separate them out from everybody, those guys are much more willing to open up as well. So we have learned that it's very valuable to give each of these groups that kind of space. Now, I keep waiting for a little bit of this competitive instinct to kick in because the credit union session has been so popular. I'm still sort of just waiting for the phone to ring, somebody to kind of drive this from a community bank standpoint as well, because I think it would totally work. We just don't have the same partner. And again, this is where I have to give another shout out to the Circle team for really helping to make this
Yeah.
happen. The work that they've done has been instrumental in making that credit union session what it is. So, but yeah, the community banks are also a very big part of the audience. They are a group that
Well,
we
by
continue to
definition, you got
see people innovating
475
for.
banks,
Yeah,
and
yeah,
only
that's
20
right.
can be in the top 20. There's an awful lot of other
Yeah.
folks there.
Well, and this is one of the things, 475 financial institutions is just an astronomical number. I mean, it's amazing. When I think back to the early days of Finovate, we were so happy the first time we had a banker show up. Like we're like, oh my God, it's an honest to God banker in the room.
And it was more venture
Um,
capitalist. I mean, people,
yeah.
on the hunt. I mean, is that basically what your audience was in the early
It
days?
used to be a lot more, yeah, venture capital based people on the fintech innovation side who are all kind of coming together to build and share. And but in the early days, remember, we were thinking we were going to go around banks. We were going to replace the
That's
banks
right.
with
That's
fintech.
right.
And so the now obviously that was not proven to be correct, but it's really exciting. And so when you think about just the sheer volume of financial institutions that exist in the United States, obviously this is still not even anywhere close to a majority of them, but it's a really large number for us. And again, the diversity and type of FI that we're seeing also makes it really fun. So, um, we want those top, large companies in the room. We want the community banks. We want the credit unions. We want the mid-size. We want the ones who, and all of them are kind of in the same boat right now, which is they're, in a very literal sense, fighting for their survival. It's not hyperbole to say that, the banks that are around today have to do a lot of work in order to guarantee that they're around in the next 5 years, the next 10 years. And so it's really heartening to see so many of these companies responding and going out and saying, okay, let's do it. Let's see what technologies are out there, especially, the ones who've been maybe a little more resistant historically. There've always been the forward thinking FIs, but now we're starting to see people come to this realization, okay, actually we can get into this space too. We've been avoiding making too many big adjustments, but we're now ready. And that's something really positive.
I'm just thinking, I mean, the average FI, maybe the average one does send only one person, but there's many that send two or three. So your audience is probably well over 50% or close to 50% banks. I mean, you're still probably getting about a good 20% of the room venture capitalists or folks like that are looking for opportunities to fund some of these companies.
Definitely strong VC attendance. In terms of the percentage of the audience, as the audience has grown, the percentage keeps dropping.
Oh, yeah, makes sense. Yeah.
But yeah, I think that's absolutely a core component as well. And to your point, there's a lot of them that wear multiple hats, right? A lot of folks who come from FIs also have venture arms, or
Corporate
people who
venture, yeah,
come
exactly.
from accelerator group also are active in the VC space. So it's not easy to identify everybody who's a potential venture capitalist, which is a challenge that we frequently hear of from our on-stage folks. Is sometimes they don't know that they're talking to somebody who's a VC, and there's only so much we can do. I can't make somebody raise
Yeah.
their hand and say, "Hey, by the way, just so you know, there's millions of dollars backing me in this conversation
Just,
right
yeah,
now."
some kind of retinal scan, and then all of a
Yeah.
sudden something flashes up. Yeah, exactly.
But no, the New York show always had done a good job of attracting the venture capital community. And what's interesting is that they don't necessarily raise their hands and say who they are until that moment they're ready to get involved with somebody, which
Makes
I actually
sense.
totally understand.
Yeah, you get
They're
the
much more
unguarded, you
likely
don't get
to
the pure
approach.
sales pitch.
Yeah, yeah. Well, a lot of them want to hear that sales pitch in the first place because that helps them understand, is this a good investment opportunity? If I
Well,
can
they've got that in the
imagine,
7 minutes on stage too, and then
yeah,
they want
yeah,
to have a different conversation.
yeah,
Yeah,
totally.
I noticed you've got it's going to be 64 demos. I believe three-quarters of them. I think if I counted correctly, 48 of them are now already posted online. I'm guessing you're kind of you're probably holding a few back for the hot topics that may pop up over the course of the last month, and some you're just kind of dribbling them out there. But I'm impressed again, given that I tend to stay pretty close to the space. There's still a whole lot of companies I have not seen before. What are you seeing trends in terms of the way you curate this? The smaller, younger companies. We were talking before. I personally really enjoy. I only see two really established names on the list right now: Visa and LexisNexis that are going to be presenting. And if they've got something new they want to show, I find that interesting too. It's great to see the young
Yeah.
folks, but it's nice to see who's got new ideas among the battleships out there.
Yeah. Oh, for sure. And I think one of the things that has always made Finovate work is the idea of putting all these companies on stage together. And certainly it's always important to have new energy in the room. There's nothing that can beat an early stage startup for motivation and creativity and just kind of pushing everybody forward. But at the same time, when a company like Visa or LexisNexis makes a move, the industry does feel it. And so being able to put that up on stage is something that's important to us. We have, over the past couple of years, we've seen a real uptick in the number of companies coming on our stage who are really early stage. A lot of seed Series A's and Series B's have been coming across our stage in 2023 and 24. This year, we're still seeing a lot of that new energy, but now we're starting to see some of those more established players come back in, which I think is really good for the industry. You can't have only one side really pushing things forward. We've been in situations in the past where there was a lot of VC money going into the space, but it was all going towards Series C's and Series D's. You get these incredible valuations, and these companies are becoming world beaters, which is great. Don't get me wrong. But in those moments, we were lacking the early stage side of the industry, and it allowed a little bit of complacency to creep in. And then in the last couple of years, we had sort of the other where you have a lot of new companies, new exciting ideas, and there's maybe a little bit of a disconnect between where they start, and what their ambitions are. And it's difficult to cross that bridge and go from this is a really good idea to this is now something which we're able to roll out in thousands of markets to a lot of different customers. So you really do need both sides of the coin innovating, and that's where I think we're starting to get there again. The pendulum is starting to swing back. I expect that we'll see more big companies getting on our stage as they have more new ideas and new technologies to show. So, this is what happens. You have early stage companies pushing the industry forward for a couple of years, then the big guys have to respond. They have to do something in order to guard what they've already got. And
Or
as they
or they buy
respond,
the
we'll
little
see.
guys.
Or they buy the little guys. And then they're super proud to show off. Hey, check out this acquisition I just made. It's my new shiny toy, and I want to parade it around in front of everybody. Fair enough.
Yeah, this is, we're talking about the first 2 days, a 3-day event. The demos all take place along with some other content as well, but that's the real focal point of those first 2 days. I like the agenda you put together for day three as well. And I mean, clearly, hot topics. You've got some of the regulars that you always bring up, the analysts all stars, the investor all stars, which I always enjoy those pieces. You've got a series of tracks. How did you decide? I mean, some of them, I guess, would not be terribly surprising what the hot topics are. How did you decide to curate, the big things that people are probably most interested in hearing about at this stage of the game?
Yeah, well, I think a lot of it is reactive on our part. We have a really significant network of people that we talk to on all different sides of the industry, and so some of it's simply asking questions. What do you think are the top issues right now that we need to cover? A lot of them actually come from questions that people submit. When we have people writing questions to panelists at previous events, even if those questions don't necessarily get answered on stage, we track them, and so it's a good indicator of what people are thinking about. So that helps us to create the content. Um, the demos help us identify where the hot topics are. When we see a lot of applications in a certain group, then we know that that's an area that we need to focus on. And of course, our two excellent bloggers, David Penn and Julie Moon, do a very good job of highlighting what's happening in the industry. Finovate.com/blog. I should always give them a shout out. It's a terrific read, and they're really instrumental in helping us to get a sense of what everybody else is talking about, what they're seeing as newsworthy stories, and so that's really helpful as well. You have to listen, right? You have to try and not only tell people what you think they want to know, but listen to what they're telling you they want to know.
I'll be curious to see those last quarter of the year demos. I'm not remembering a lot of stablecoin up there, and given the Genius Act and everything else going on in that space, I don't know, maybe we still have to bubble up and see what the innovators have kind of cooking right now, but that will be one that I'll be curious to see if we get a few of those.
Yeah, well, I think these are some areas where there's a lot of industry attention, but not necessarily the companies who are in that moment where they're ready to demo yet.
Yeah.
You do have to be fairly far along before you can get on the stage. Obviously, the last thing we want is somebody to face plant up there.
Well, by
and get up there
definition, you
before they're
require a
ready.
live demo. So you're past
Right.
really, it's not even MVP. You better have a really true workable product out there.
Yeah. Oh, yeah. Or the audience will pick it apart if you don't. So, it's worth putting the time in. But I still think we'll start to see it. There's again a lot of venture capital money going into it. It's something that banks are certainly thinking about, and that those two factors typically will result in some good ideas, some good companies bubbling up. So, as they say, watch this space.
Yeah. And I, as always, enjoy, and I love the audience vote and the approach that there's no real criteria assigned to best of show. And
Yep.
then you get up there on stage at the end in the exhibit hall and give out usually what about roughly the top 10% roughly that
Yeah. So, and this is always a fun part after the show. I always like checking in with you to see how many you guessed correctly. I always like to hear who you voted for and see if you're. And typically, I would say, correct me if I'm wrong, but I feel like you're about half.
exactly.
You
And I
usually vote
take
for
pride
about
in that.
half of the
I
winners.
like the fact that I would, if I got all of them, I'd think there was something wrong. I mean, there's
Yeah.
groupthink, or just it meant that there weren't enough really good solutions out there, because the audience is diverse enough and different things are going to appeal to different people, and depending on
Yeah.
what perspective they're taking and bringing into the mix.
Yeah, absolutely. It's a difficult award to win for sure. You never know how people are going to vote. You never know what's going to resonate. And people bring their own priorities and biases to the process as
Exactly.
well. So there are certain groups that always have a really difficult time simply because there's just not a lot of folks in the audience who are passionate about what they're working on. But for those types of companies, finding the right three people could be all that you need in order to make it to the next level. So I always
It's a
tell the
nice
companies
logo
on
to say,
stage,
hey, you're a best of show winner. But like you say, even
totally.
better is if you walk away with three referenceable, prospects that turn into referenceable clients. That's to me
Yeah,
an even bigger win.
absolutely.
Now you'd offered up a discount code for our listeners that
Yes, yeah. 20% off. Again, there's still time to get involved with Finovate Fall. The code BIG20 all one word, will save you 20% off. You can enter it on the registration page at Finovate Fall. There are still a few last minute sponsorships available, although that's getting pretty slim pickings now. And there, to your point earlier, we do always keep a couple demo slots in reserve. So if there's some late breaking innovation or somebody listening to this wondering if they have a chance to get up on stage, give us a shout. You might still be able to get up there.
So we'll have your information out there on the website too, as well as a link to the website. And it's fun to just kind of watch and see as I said, at the time we're recording, 48 demos announced. I got a feeling it may even be a few more by the time people listen to this.
It should be a steady drip from here. Yep.
Right. Greg Palmer, Finovate. Always enjoy it. I'll see you in New York in a couple of weeks.
Thanks, Glenn. My pleasure.
After I spoke to Greg, the news also broke that the Circle Fund officially closed its second fund at $360 million, which, for all the talk about fintech funding drying up, that's a very, very impressive number. Congratulations to our friends Nick Evans and group, Jim Ryan, other folks we know over there at Circle. So there is a nice pot of cash, and we'll be seeing them and some of the companies in their portfolio, and I'm sure they'll be scouting out new ones when we're out there in New York City at Finovate. Thanks to Greg for providing that the discount code that our listeners can use. If you go out to the show notes, it'll be out there as well if you need to use that for registration. And if you do make it out to Finovate, I'm always sitting in the front row. I'm a geek. I sit in the front row. I take lots and lots of notes. Come by and say hi if you get a chance. With that, another episode of the Big Cast in the books. Again, my name is Glenn Sarvati. You can find me via my firm 154 Advisors through all the usual channels, LinkedIn, Blue Sky, etc. You can also find me at the Best Innovation Group website, big-fintech.com, where you'll find our friends John Best, the grand poobah of the Best Innovation Group. You'll find him at JB Fintech or at Big Fintech for the Best Innovation Group on your social channels as well. We'll be back again next week with more new content. Every Tuesday, we've got new content here on the Big Cast. And if you haven't already, we'd always appreciate if you subscribe, like, wherever you get your podcasts. You can, of course, find us at Spotify, Apple Music, etc., or directly at the website on the Media tab, where we also post blogs and other kind of knowledge about the space that we like to try to keep on top of as best we can. There is so much going on. If you find things that you don't think that we may not be aware of, or you'd like to see us take a deeper dive on, please get in touch and let us know. We always appreciate hearing from you, and we always appreciate you tuning in. Thanks again for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.